Hello everybody, welcome back to my channel, Trading Secrets. This channel is for entertainment purposes only. For those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. And through this channel, I'll be providing some stock analysis and a quick update on the $1 Million Challenge. So if anybody's not aware of this, this is a journey of an investment of $1,000 to a return of $1 million over a period of 3 years using a strategy called compound return investing. So the objective is to try to get 201 trades, each with an average return of 3.5%. It's not 201 consecutive trades, and we do take into account losses. So for further details about how to join us in the challenge for little as $9 a month and also get access to an exclusive in-depth strategy video, information is available in the description below. In the previous video, we looked at XOM and MMTLP with a focus on key dates and key questions, so please refer back to the previous video for updates on MMTLP. In today's video, we're going to be doing a review of the weekly watch list, and also I'm going to be looking at a quick analysis of two potential buyers for NextBridge hydrocarbons, so stay tuned for that. So let's first of all have a look at what's going on in the market. So there was some good news today. So quick headline here from Yahoo Finance. We can see that the stock market has rallied to snap a 3-week losing streak. So the good news here is the US stocks did extend a broad-based rebound today, Friday, capping off a sell-off that has spanned 3 consecutive weeks. So the S&P 500 was up, and that was up approximately 1.5%. So let's now have a quick look at the heat map, and we can see again quite unusual and something that we've not seen for quite a while here, and that is almost a clean sweep of green. I'm going to start by giving a shout out here to KJ Forever, who's responded to a retweet from John Berder, and the retweet, let's have a look at the retweet first of all from John Berder and what he's retweeted from Squawkbox, who've posted here: your job as director of a company is to deliver excellent products and service to customers. That's how you maximize shareholder value. So the retweet also goes on to say CVX is going to be a more successful company if it can lean into its core business model of selling fossil fuels. So the question with regard to John Berder, is this a hint? So with regard to John, he would not be able to provide a hint. If he were to provide a hint, then certainly that could be very dangerous, especially from a legal point of view. So what John has said here is no hint intended, just a solid take on what fossil fuel companies should be doing. So again, with regard to potential implication for NextBridge hydrocarbons and a potential sale, again, John is being careful not to make any direct correlation here, but it is interesting that he is retweeting this, especially with regard to directors of companies trying to get maximum shareholder value. So before we look at the analysis of two potential buyers for NextBridge hydrocarbons, I'm going to give a shout out here to Grinning Green, and what he's posted here is again purely his opinion. The utter silence that has surrounded this play to me screams of interested parties in our assets. So I'm sure many of you will be aware that when sale of assets, especially in oil and gas, are carried out, there is extreme secrecy and privacy, and nobody really talks about them, and this is important to maintain. So we're also looking at the pandemic, we're looking at the rise in oil prices, Putin, Europe needing new supplies, potential new pay zones, and what Grinning Green here is saying, this could be a perfect storm for investors. So if you remember what George said previously, timing could not be better. Then if we look at oil companies, we're looking at record profits, more supply as a way to offset the tax implications. So again, it certainly seems to be, from that point of view, very, very bullish. So let's now have a look at two potential companies that I'm going to analyze with regard to potential sale of assets for NextBridge hydrocarbons. I'm going to start by sharing an article here from Seeking Alpha. This is dated September the 7th, 2022, and the headline here is Occidental Petroleum, Exxon Mobil and the Buffett Premium. So with regard to Warren Buffett, we know he's a proven investor, we know he's big on oil stocks. So in terms of these two companies, he does hold stocks in Occidental Petroleum, but he doesn't hold stocks in Exxon Mobil. So let's have a quick look at an overview of both companies. Let's start by having a look at a profile of Oxy. So we can see here on their website, it states that we unlock potential by reaching for the impossible and achieving it. So with regard to the company, they are looking to provide society with reliable energy and essential products while reducing greenhouse gas emissions and making the world a better place to live. So certainly very ambitious. Let's have a look at their interest with regard to the Permian Basin. We can see here that Oxy is a leading producer in the US Permian Basin, one of the most prolific oil basins in the world, and we operate some of the top performing wells in the industry with approximately 2.9 million acres in Texas and New Mexico. So the combined Permian Basin portfolio of conventional and unconventional acreage differentiates us from our competitors. So this certainly puts Oxy in terms of a prime position and a prime potential buyer for the assets, especially as they have already interest in the area. So we can see at the bottom, final paragraph at the bottom, Oxy is the Permian's leader in enhanced oil recovery. In these operations, CO2 is injected and permanently stored in oil and gas reservoirs during production to improve efficiency, economics and environmental sustainability. So again, certainly a bullish sign, positive information and a good potential buyer for the assets. Now I'm going to share with you my preferred buyer for the assets, Exxon Mobil. So we can see here with regard to supply and production, what the company is stating here is they produce more oil and gas than any other US energy company. So again, a mega player here. Energy solutions are required to meet basic human needs. So the current supply and demand in terms of the oil and natural gas market is having a very real impact on families across the world. So the company is aware of what's going on, and they're also stating here demand is outpacing available supply. So they are aware that supplies are limited and difficult to get, which is increasing price of oil and refined products like gasoline and diesel fuel. So obviously we know this is an imbalance. The company are aware that it's an imbalance, and what they have also stated further down is that rebalancing supply and demand will take time. Investments in oil and natural gas productions are large and take years to implement. So certainly true, but obviously Exxon is in a prime position here to take advantage of these supplies, which are certainly there. We know they're there. So let's now have a look at what else the company have done in terms of their background. And in the final paragraph here, we can see that Exxon is investing more money to grow oil and gas production than any other US company. In fact, they've also stating here they invested twice as much to develop global energy resources than they earned, and they're looking at here an investment of approximately $118 billion versus $55 billion earned between 2017 and 2021. So I do expect this investment to continue. So let's have a look at an overall profile of this investment. On the left hand side, we've got the figure of $118 billion. And that's with regard to capital spending, double the earnings over the past 5 years. So the company is not afraid to invest and not afraid to look from the long-term point of view. We've got a figure here of 50% increase in capital spending on US oil and gas production between 2019 and 2021. So again, a positive figure here going in the right direction. 70% oil gas production increase in the US Permian Basin between 2019 and 2021. So again, similar to Oxy, they're a major player in the Permian Basin, and again, a very significant potential buyer for the assets. Finally, in terms of oil, we're looking at 250,000 more barrels of oil per day of capacity to refine US oil coming online, equal to a new medium-sized refinery. So again, significant figures here with regard to production. And the final thing I want to focus on with regard to Exxon is their increased production in the Permian Basin. And what we can see here, what they've stated on the investor relations section, is between 2019 and 21, they increased oil and gas in the Permian Basin, West Texas, Southeast New Mexico by 70%. And we're looking at an amount of around approximately $190,000 barrels per day, currently producing more than 500,000 barrels per day just in the Permian Basin operations, and they expect to increase production by another 25% this year compared to 2021. So that's quite a significant figure. So they are certainly looking to increase production, and I think certainly for the long term, I'm sure the company will be looking at a potential acquisition of assets. So again, time will tell. Let's wait and see. And finally, I'm going to finish off by giving a quick shout out to the weekly watch. This is something that's shared exclusively with the Discord members prior to trading, usually on the Monday. This week it was shared prior to the trading on the Tuesday. So you can see here some of the stocks that we called out were ticker symbol AUR, PXMD, NCNO, USEA, HOLI, RUBY. There were other stocks as well that we called out that have done exceptionally well as well. But let's have a quick look at some of just the first few here on our list. First one is ticker symbol AUR. We can see here this is up just today in excess of 7.42%. and also over the previous 5 days it's up a very significant 29%. So again, congratulations to everybody who got in ticker symbol AUR. We also called out HLLI, so this is a stock that was up again very close to 3% today, and over the previous 5 days up close to 2.5%, so not a huge gain but certainly positive, and also green. We also called out ticker symbol NCNO, also known as Encino, and today it was up in excess of 5.3%, and over the previous 5 days up in excess of 11%. So again, another good call here. We also called out ticker symbol RUBY, so you'll know that this was featured in the previous video yesterday, and gains in this stock have been made in excess of 70%. It has been quite volatile. It has trended down today, but certainly with these kind of stocks, great idea to take profits when they shoot up. So over the previous 5 days it's still up approximately 71%, so great returns there. We also called out ticker symbol USEA, also known as United Maritime Corporation, down approximately 5% today, but again up it close to 35% on the week. So another great call. Not all the calls were successful, but certainly overall we seem to be doing quite well. So to get access to the next weekly watch list, which will be shared prior to trading on the Monday, you can certainly consider joining us in the Discord, which will also give you access to the challenge. Thank you very much for watching. Please stay tuned.